Well, there are thousands of indicators listed on stock market, but the problem with them is that they lack context. What I mean by this is basically, let's say if you are deploying a breakout strategy, that won't work better when the market is in sideways. Similarly, if you have a mean reversion or non-directional strategies such as straddles and strangles, that won't work better when the market is trending. But the big question here is that how can we identify such contexts before it happens? That is exactly what I'm going to discuss in today's video. There is a concept called initial balance, which is basically derived from the concept of market profile. I'm going to dedicate this entire masterclass to explain in detail about what exactly it is, how to use it, and different strategies, because context is very important. Based on the context, which strategies we can deploy on which market conditions. This is a kind of a new videos that we are introducing where we take one particular subject and we discuss about it in a detailed manner. I kindly request you to watch this video till the end to get the complete clarity, and most importantly, if you are someone who is watching our videos for the first time, kindly consider subscribing to our channel to get notified when we upload new videos related to trading. And more importantly, I'm also going to give certain assignments based on the discussions of today's videos. Make sure that you practice them to get the complete hold on the strategy. So without any further ado, it's me, Nataraj Malwade, author of The Power of Rule-Based Price Action Trading. Let's get started. So let's start our video by understanding what exactly IB range is all about and why it makes all sense for us to consider this subject, because why is very important when we are developing any particular strategy. So first let's focus on what it is. IB range typically or technically we can say that the initial hour of the market. Any particular day, if you look into the market, initial hours would be usually volatile. So once the market volatility subsides, market settles down, that range is what we are going to call as an IB range. So in simple words, the range of the market, initial range of the market that it takes to stabilize is what we can call as IB range. It could be 5 minutes, it could be 15 minutes, or it could be 1 hour, 2 hour, 3 hour. It entirely depends on the instruments or the systems that you trade in. But considering our 6.5 hour session, we are going to consider the first 1 hour of the market. First 1 hour of the range is what we are going to define as initial balance. Suppose, let's say if you are trading crude oil or maybe gold, if you are trading in commodities, you can consider 3 to 4 hours, initial 4 hour session as initial balance. Now the main question is why it make all sense for us to look for IB range, why it is so important. Because see, at any given point in time, any big player who want to get into the market, obviously they would be looking for a liquidity. So our stop loss, the retailer stop loss, is kind of a liquidity for them to get into the market. So ideally, where do we keep our stop losses? For days high and day low. So let's say if the market is stabilized, 1 hour we are giving the time, and after that market is stabilized, assume in that case, most of the people, it may be a long trade, it may be a short trade, obviously most of the people would be placing their stop losses at days high and day low. At that time, it was an initial balance high and initial balance low. So obviously there would be lot of liquidity available once the 1 hour range is completed, and big players want that kind of liquidity. And there is one more point I want to add on here. Consider this example here. 1 hour is completed, and after that market breaks the first 1 hour high, and the possibility of market returning to the opposite level, which is IB low, is quite low. And more importantly, we are not going to do anything in the initial hours of the market. Once the market is settled down, we are going to take certain decisions. Any strategies that I'm going to discuss from now onwards is only applicable after 1 hour is completed. So now it's time to start our analysis on the completed hour. So once the 1 hour is completed, we have two important levels, IB high and IB low. And the range or the difference between IB high and IB low is what we are going to call as initial balance, or basically IB range. And based on this, we have to take certain decisions. Now it's time to classify these IB ranges into 3 different types, because there are, based on the range itself, we can classify the IB into 3 different types: small IB, large IB, and medium IB. Nataraj, you might ask this question, Nataraj, how can we identify this? Because see, the moment, let's take an example here. If I just show you this example, this is the day 1 IB range. If I ask you to predict whether it is a small, medium, large IB range, obviously you would not be able to spot it. But now if I am giving you the second day's IB range, now if I ask you to at least say which one is smaller, which one is larger, obviously you would be able to identify the days 1 IB range is smaller than the days 2 IB range. So this is a relative comparison with with which we can classify IB range into three different types: small IB, medium IB, large IB. So the big question is, how can we identify this small, medium and large IB, and what is the logic behind it? Say for example, let's say we have a small IB range. This we need to understand, this is the logic behind it. When we have a small IB range, which means what? The first 1 hour of the market is kind of choppy and there is nothing much exciting happening within the first 1 hour. That means big money is not yet entered the market and there is more scope to the market to extend its range for that specific day. So if we have the medium IB range, yes, people have entered, big money have already entered into the market, but still there is a room left for the market. So when we have a large IB range in place, which means what? Immediately we can identify that the initial hour of the market maximum move has already happened, and which indicates that smart money or the big players have already entered into the markets in the initial hours of the market. Because of that big money, market extended its range in a large extent. That is exactly the purpose of why we need to identify small IB range, medium IB range and large IB range. Now we are getting into the most exciting part of this particular tutorial, that is to identify. Right now we know that there are three types of IBs, but how can we spot it without applying any subjectivity? So objectively, how we can distinguish between large IB, small IB and medium IB, that is exactly what we are going to understand now. Now we are looking into the Groww terminal. Here, by using certain information in the charts, we are going to identify the IB type. So to do that, I am going to take the help of an indicator called average true range, where you can find that if you just enter the indicator. Obviously it is a common indicator, you can find it in most of the trading platforms. So I will explain what it is. So basically, let's try to add this ATR, and the next immediate step is to convert our charts into daily time frame chart. So let's add the daily time frame. This is the first step. So what ATR is all about? ATR is basically an indicator that explains, or basically that identifies, the average range of the market. So for example, today's IB range is 50 and yesterday's IB range is 100. So if you average it, obviously it comes to around 75. The average range of the present market is 75. The beauty of this indicator is that the moment you are considering ATR, so basically you are taking volatility into account, which helps you to deploy your strategies dynamically. That is very, very important, because the range of this year's market may not be same as last year. So there will be always changes in the volatility, and ATR will help you to identify, or basically ATR will help you to deploy your strategies according to the dynamics of the market and according to the volatility of the market. That's why ATR data is very, very important. In this, we are utilizing daily time frame ATR, and there is one variable here. So basically how many days or how many periods that you want to look back. Let's go to the chart now again, and in this case, if you visit the ATR indicators setting here, just by clicking on the setting box, by default the setting is at 14, but I'm going to change this to 10. Why 10? Because I want to look into the daily time frame average true range for last 10 days. Considering 2 weeks volatility, I want to consider into the account. That's why I'm taking 10 days ATR here. Once this is done, most of our job is done. So the ATR, the present ATR in the Nifty is 202 rupees. Focus here. So around 200 rupees, right? Which means the range of the market in the present condition, it is around approximately 200. All right. So now we have to calculate two important levels. So I want your complete attention now. First one, let's call it as L1. There is no such thumb rules, but I'm just going to define it to make it objective. All right. L1, how we can calculate it? ATR, which is in this case 200 divided by 3. Why 3? Why not 4? I'll come to that part later, but try to concentrate here. So 200 divided by 3, how much? Around 66. All right. Around 66. This 66 is our L1. Now we are going to calculate L2. L2 is equal to ATR itself. Suppose, let's say if you are planning to analyze tomorrow's IB range, you need to calculate this today itself. So once the market is completed, you can prepare yourself by calculating this level. So level 1 is 66 and level 2, which is ATR itself in this case, is around 200. So for Nifty, tomorrow's market, after completion of the 1 hour, if the IB range falls below 66, then I'm going to mark it as small IB range. Point 1. Point 2, Obviously you would be getting the idea now. So in this case, let's say if tomorrow's IB range falls between 66 to 200, in that sense I'm going to call it as medium IB range. And last, obviously what left is the large IB range. When the tomorrow's IB range itself is greater than the daily ATR, then I'm going to call it as large IB range. I hope this concept is clear. Once the market is opened, we are going to wait for first 1 hour. After that, we are going to take the daily time frame in the last day's daily ATR, and we are going to divide that number by 3. With that, we get L1. And L2 is nothing but the ATR itself. If tomorrow's IB range falls below 66, then we are going to call as a small IB. Between this, medium IB, and above that, above the ATR itself, that means it's a large IB. I hope this concept is clear. Once you know how to identify this, most of the job is done. Based on this, we need to deploy different strategies. I'll be discussing that in the next section. But before I do that, it's consider this as an assignment. I want you to calculate, at least for Nifty or Bank Nifty, any instrument that you love to trade. Take the chart and try to calculate or identify large, medium, small, at least for 1 to 2 weeks, so that you will have a grasp of what I'm basically speaking about here. Once this is done, we need to analyze the market based on the individual context. So this is where context kicks in. Next section is all about that. Well, as I said in the beginning, any strategies that we deploy, especially for intraday, it has to in line with the context of the market. Right now, we know how to identify the IB range. Once we do that, once we know this is a large IB, small IB, and medium IB, based on individual IB, we have different strategies to play with. So entry and exit, I'm going to discuss these two elements in a different sections. First, let's talk about entry, and for small IB range, we are going to discuss about an entry now. So in simple words, when there is an IB, small IB means what? Big money is not yet entered the market. Considering the daily ATR, there is still room left in the market. That means the small IB typically offers greater rewards. So in most of the cases, it doesn't mean every time small IB occurs, you will be getting a trending days, but in most of the cases, it offers a good trending moves. So this information itself is enough for us to play any particular strategies. In this case, I'm going to deploy a simple strategy called opening range breakout. When there is a small IB range, we're going to deploy opening range breakout. Let me clarify this to you using the screen. So here again, I'm using the Groww terminal chart here, and one more thing I want to mention. So basically, very recently we have introduced TradingView version 2 platform, where you can access advanced indicators like volume profile and all. So obviously you can definitely check this out. So right now we are in the platform, and in this case I'm using Nifty 50 index chart itself. So in this particular case, so as you can see here, this is the day I'm going to speak now. So basically on this particular day, once first hour completed, right, we have two important levels. So this is where the first 1 hour completed. This is a 15-minute chart. This is an IB high. All right, this is an IB high, and this is IB low, right? So in this simple step, so we can deploy the strategy called ORB, opening range breakout. But to give you certain advanced tips, so here in this case, let's not consider the first 1 hour itself for ORB. Let's wait for 11 a.m. because see, when we apply the breakout strategies for the first 1 hour itself, there will be a chances of getting false breakouts. Hence, I'm going to consider the first 11 a.m. range as my opening range. Opening range. So let's wait for 11 a.m. and after that, let's mark two important levels. And in this case, market triggers the range high at this candle. As you can see here, market range was broken at this particular candle, and after that you can see how beautifully market trended in upward direction. So typically in such kind of scenarios, we can anyway expect the double of the extension of the IB. For example, let's say IB was 50 points, just an example. We can expect market to move by 100 points in any particular direction. We don't have to define the direction when there is a small IB range. We can simply deploy ORB. If the range high breaks out, then we are going to opt for a long trade. If the range low breaks out, then we are going to opt for a short trade. So we are not going to define the direction when there is a small IB range. So this is an entry strategy, simple entry strategy for small IB. Now let's talk about entry strategy for medium IB range. This is very important because in most of the cases, imagine 55 to 60% of the cases, you are going to face this IB range. So that's why it is very important to understand how to trade medium IB range. First thing, any of the strategies, like it could be large IB range or medium IB range, we need to define the direction for the day. That is very important. That is what we are going to do in the first step to trade medium IB range. Once we know that, for example, let's say this particular range, very recent range on 9th April. So this range, assume you identified this as a medium IB range. All right, medium. This is a 15-minute candle. So this is where we have the IB high. This is where we have the IB low. In this particular case, first thing is to define the direction. How can we do that? Well, in simple sense, there is an indicator called alligator. You can use this. In this example, I'm going to utilize that, and also fractals. How can you find this? Go to the indicator, add fractals. Fractals, you can see William fractals. This is one of the indicators that I've added, and similarly alligator. Most of you might have heard about this. So basically this helps us identify the trend, at the same time identify the swings. I'm going to explain that now. William, alligator, these two indicators I've added into the screen to trade medium IB range. First of all, this is very important, the fractal. As you can see here, this particular details, right? So what it does is basically it helps us identify the anchor point of the market. That's what. So this is a basic concept of the price action. When market makes higher highs and higher lows, means what? Market is in the uptrend. Similarly, if the market is making lower lows and lower highs, which means what? It's basically trending in the downward direction. So the question is, how can we identify this reversal point, swing point, or anchor point, anything that you can call as? So how can we identify this? By using the help of fractals. So easily we can identify the swings. Once we know how to identify the swings, obviously based on that we can define the trend of the market. This is one of the aspects. And now for simplicity purpose, I am going to add the alligator indicator here. So to explain it in a simple sense, basically we are going to take the help of fractals for getting into the trade, but alligator is what helps us to define the direction for the day. For example, let's take an example of this day. This is very important. So here I need your complete attention now. So in this particular case, right, so this particular day, first 1 hour is completed here. This is IB high, this is IB low, right? Once we know that this is a medium IB range, right, after first 1 hour, we are going to see the direction. First of all, if the market is trading above these three lines, which indicates that the present trend is positive. Point 1. Point 2, that if these three moving averages are open and trending in one particular direction, that means market is trending. So this was a deadly combination that both the we can call it as jaw, teeth, and lips. That's not that's a very technical term. In a simple words, it's a moving averages. All three moving averages are open. Point 1, and they are trending in one particular direction. In this case, it was a positive direction. This is a deadly combination, and on those days we got a medium IB range. When that happens, either we could consider to enter at the breakout of IB high itself. That's what happened in this particular candle, right? The IB high got broken, and after that we got a very good up move, right? Or we can also consider, let me erase this, give me a moment. Or we can also consider to enter at swing high breakout. So how to know whether it is swing high or swing low? Based on the fractals, right? Suppose, let's say, just an example purpose, assume it's the same day, market opened and 1 hour is completed, and you identified it as a medium IB range, direction is positive and it is trending in the upward direction. Market breaks this high, swing high, then you are going to take the long trend. Either the IB high breakout or the swing high breakout above these averages is what the entry trigger is. Suppose this is a long example, let's consider the short trade example. So here in this case, you can observe that this particular day, all right, market first of all was trending in the downward direction. How can we say that? Price was below these three lines, point 1, point 2, all the three lines are open now. So that indicates that market is trending in the downward direction, and we got medium IB range, right? So either we can consider entering into the IB low breakout itself, or in some cases what happens, market again moves up a bit and then it creates a swing, and we can also consider to enter at the breakout of that particular swing. And there will be a scenarios like that you are seeing now. So basically market is kind of moving in a range. Market is kind of moving in a range, and even though we got our initial balance was here, the IB high and IB low was here, and we know that market is not trending. And basically how can we identify that? Basically by looking into these three lines itself. If there is no clarity in between them, obviously that indicates that market is trending in the sideways direction. During that, we can avoid the trades also based on this itself, based on this information. Let's say we got an entry here, right? We got an entry here, but at the end of the day market closed somewhere here. Even though if you got into a trade by a breakout of the swing high when the market was trading above the moving averages, you would have entered somewhere here and you would have exited your trade here. So obviously in this particular case, trend wasn't clear because the moving averages was not clear. So one was trading above and below. So basically there is kind of a choppiness in the volume in the moving averages itself that indicates the sign of sideways. So you could also consider deploying kind of non-directional strategies such as the strangles and straddles on those days, considering the every day is expiry, so obviously if you get this kind of opportunity, you could consider deploying the straddles and strangles on those days. So this is about medium IB range. Now let's focus on large IB range. This is very important. Basically when there is a medium IB range, we have a medium opportunities. There is a still chance for market to extend its range, but the chances is very minimal, and hence we take the help of alligator and fractals to time our trades with respect to the entry. But now with respect to the large IB range, when there is a large IB range, typically it is better to avoid the trades because maximum move has already occurred in the first place. But however, if you really want to give a try on those days, you can think of deploying mean reversal strategies. Let me show you certain examples related to that. Well, as you can see here, this is a very recent example of Nifty itself. So let me zoom in a bit. Yeah. So in this particular case, look into this particular chart. First candle, second candle, third and fourth. So as you can see, maximum move has already occurred in the first place. Obviously this was a large IB range. Large IB range. When such things happen, we can think of trading reversal trades or kind of mean reversion trades. In most of the cases this happens. In this particular example, once the IB range is formed, this was an IB low, this was an IB high. Once the IB was formed, we can see simply we can use the help of fractals itself, this breakout, right? So the last swing high breakout was happened here. That should be our entry. So this is a mean reversal trade, or you could also consider getting into the trade. This is a very aggressive entry. The moment market further breaks the IB low, and if it forms kind of hammer kind of a patterns, that also could be our entry signal when there is a large IB range formation. So we can either enter into the trade here, or maybe if you are a bit conservative like me, so obviously you can wait for swing high breakout and then get into the trade. The main thing here is that just by looking into the short trade, just by looking into the downward move that we have seen in the first 1 hour, based on that we are not taking any decisions, the random decisions based on that information. We are practically seeing the information. Large IB range happened, that means maximum move has already occurred for the day. It makes all sense for us to look for mean reversal trades. This was also one of the examples of large IB range. As you can see, this was IB high and this was IB low. As you can see here, just by looking at the range itself, we can easily say that it was a large IB range. Large IB range. When large IB range happens, we can think of deploying the mean reversal strategies. Where do we got the signal? As you can see here, this candle, right? We can easily get into the trade when the market closes like this with kind of this engulfing pattern. So this should be our entry, and after that market has reversed in the opposite direction. Well, so far we have discussed about IB types and how to analyze them using the ATR, and how to deploy the strategies based on the individual IB context. I have discussed that so far. Now comes the important part, that how we can exit our trade. That is very or equally important, because that's where you are going to realize your profits, right? So there is no thumb rule because each person has their own personality. You have to develop your strategies according to your personality. I'm going to give certain ideas creative ideas with which you can manage your exits. There are many ways, but I'm going to discuss about two important ways. Number one is by utilizing the fractals itself, or basically the swing high and swing low itself, we can manage our exits. For example, considering this as a medium IB range, all right, assume that you got into the trade when the IB low was broken, and immediately where can you keep your stop loss? The last swing high. This is what your stop loss is. So unless there is a new swing high formation happens below that, you are not going to trial your stop loss. So first thing, your initial stop loss was here, and after the formation of new fractal, you are going to move your stop loss to this new level. So with that, you are going to secure your profits when market moves in your favor. So it's a simple way of managing the exits. And in this case, so this is an example of a long trade. So this was a IB high, this was an IB low, and in this case market breaks IB high at this particular low. Assume that you got an entry at IB high breakout itself. You could consider your stop loss, keeping your stop loss either to the IB low, this is a bit wider range, or maybe the last swing high also you can, swing low also you could consider as your initial stop loss. Once market started to moving in your favor, and when there is a new fractal low formation happens, you can simply trial your stop loss to those new levels. By trailing your stop loss, you can easily reduce the risk and also minimize the risk and maximize the profits as long as market moves in your favor. So if your stop loss didn't trigger, obviously as it is an intraday trade, you can consider exiting at 3 or 3:15 based on your broker timing. So basically 3 PM or 3:15 PM is an ideal time to square off your intraday trades. And there is one more way of managing your exit, and it is my most favorite. It's called as ATR stop loss, average true range stop loss. Earlier we used daily ATR for defining the IB range, but now we are using the time frame ATR. Maybe you could be trading 5 minute or 15 minute, that time frame ATR itself to keep our stop loss. Assume I'm using 15-minute charts here, and in this case we can simply apply an indicator called super trend. This is the simplest way of keeping your stop losses. There is an indicator called super trend. You can simply consider adding that indicator here. You can change this particular number according to your comfortability. Maybe 1.5 would work better in most of the cases. All right, so this is a stop loss level that we need to consider. Basically what it does is it calculates the ATR of that specific time period. For example, 15-minute ATR, assume that it is around 20. All right, 1.5 is the multiplier we have adjusted in the setting. So that means it is going to multiply it by 1.5. So which means how much? 30 points. So every time there is a movement in the market, it is going to adjust that stop loss according to the ATR first of all, and if there is a significant move that happens in your favor, it is going to move this particular stop loss. As you can see, this green line, this is nothing but our stop loss. So when market moves in your favor, obviously this green line also moves according to the market trend. So it definitely helps us considering the initial stop loss. For example, assume that you are getting into the trade here, long trade. This is an example. You can consider placing your initial stop loss at this level. That is basically nothing but the super trend level itself. Let me delete this. Yeah. So once market started moving in your favor, as you can see that ATR adjusted here, you can simply adjust your stop loss to this particular level. Similarly, when market was here, obviously your stop loss should be here, because the beauty of this indicator, or basically ATR, is that ATR considers the volatility aspect of the market, and in that sense stop loss trigger, unnecessary stop loss triggers reduces a lot with this particular approach. That's why I like this approach the most. So in this particular case, as you can see, our stop loss was triggered at this level. Assume if you had kept your stop loss at the initial level itself, you'd be making losses. These points would be your losses, around 30-40 points would be your losses, but that you covered by simply trailing your stop loss according to the ATR. Let's look into the short trade example. So as you can see here, this is a short example. Assume that you got a short entry at IB low itself. You could either consider swing high as your stop loss, or in this case, assume if you are following ATR, your stop loss, initial stop loss would be somewhere around here, considering this chart. So when again market moved in your favor, such a significant move, obviously ATR also shifted to this level. So by the time this reached to the third candle, you had already captured, or basically by seeing your stop loss somewhere around here, you are already in the profits. No matter what happens in the market, you have already captured the certain profits in your trade. Similarly, at the end of the day, your stop loss was triggered at this particular level. You have captured all this trend by using this simple approach of trailing your stop loss according to the volatility of the market. Now comes the important point. Risk management is very, very important. Whether you are trading this particular method or any particular method, if you are not following a proper risk management methods, obviously you are going to give all your profits one day for the market. So it is absolutely important to manage our risk. But how to do this? By controlling your position sizing is how you are going to manage the risk. Let me show you an example. Assume in Nifty, alright, so you are getting into the long trade here. Just an example, assume it's a 20,000 level, and immediately you know that your stop loss level is somewhere around 19,950. So how many points? 50 points is what the risk that is there by default. It's a strategy risk is what we can call as risk points. So assume that you are ready or you are willing to risk 5,000 rupees. So how many quantities you should be trading? Let me know in the comments. Well, so in this particular case, we are going to divide this 5,000 by 50. That is the strategy's risk. And in this case, we get 100. So this would be your quantity in this particular case. So by opting 100 quantities in this trade, you are only limiting your stop loss, or even though stop loss triggers, you are limiting your risk to 5,000 rupees. That is your comfortable risk. Similarly, assuming you are using ATR kind of stop losses, obviously this would be changing for every single trade, right? So in this case, it was 50 points. Assume your risk point is 100 now, because market volatility has changed and your stop loss is now, instead of 50 point, it is 100. So you should again control this particular trade with proper position sizing. Assume you are risking 5,000 rupees, you are ready to risk 5,000 rupees, and if you simply divide 5,000 divided by 100, how many things? So basically in this particular case, 50. By opting 50 quantity in Nifty in this particular trade, you are making sure that you are not going to lose more than 5,000 rupees. That should be your position sizing calculation. For every single trade, you have to do this. Otherwise, market is not going to respect you. Market is dynamic. No matter what you follow in the market, obviously at the end of the day, how effectively you manage your risk is what matters the most, and that is what very, very important. So consider this assignment. Basically whatever we have discussed so far, based on that you need to backtest this for any particular instrument, whether it is Nifty, Bank Nifty, any instrument that you love to trade. So please backtest this particular method, because it is easily backtestable. You can easily check any particular chart and you will be able to identify the trade opportunities based on the context. Basically the ideology so far we have discussed is to identify the context based on the IB range, and based on that we are going to deploy the strategies with respect to the IB range context. I hope you found this video helpful. If so, why not to like this video and also share this video with your known circle, so that they will also get benefit of this kind of information. And more importantly, whatever the discussions I have made so far is for educational purpose only, not for buy or sell recommendation. Any particular investment, especially trading, are subject to market risk. Please take a consideration of the risk part and then take effective decisions based on your research and comfortability. That's all for today's video. It's me, Natra, signing off. See you in the next video. Until then, Jai Hind.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.